Hi, welcome to the Market Alert for Tuesday, 20th March 2018. So yesterday in the pound, we see this moving up sharply from the off. We had a bit of a battle going on initially. We got buying followed by selling, and then you can see this going on, and then eventually the bulls win and we see the market moving higher. We then end up in a situation where there is resistance at this level. It seems an odd place, but if I go to the daily chart, you will see why, because we were at the first 76% retracement and I just transferred this across, and then also the second one once the market then moved back to the upside as well. So I could see where we were getting the resistance levels. You can see that there as well, and then eventually the market breaking through the 140.50 before stopping, and then coming back and then trading sideways on the overnight there. So in the daily you can see that we drove through this resistance, not through this 76%, and now we're banging ahead against this one at the moment. This needs to be taken out if we're going to take out this level and then head up for this level as well, which is another 76% retracement, but also a high pivot point that stays or sticks out there at 141.44. News today, really there's only the G20 meeting. The market's waiting for tomorrow's news, which I'll show you in a moment. We've got CPI from the UK. This is forecast to be lower today. We'll see if that actually happens. But then there's only the G20 meeting. If you have a look on the Forex Factory, tomorrow is Powell's first big job with the Fed, and it looks like he's going to, he's forecast at the moment anyway, to increase interest rates from 1.5 to 1.75, and again, this is just insanity. They should have done this years ago. Well, shouldn't even have reduced the interest rates, frankly, and the bank should have gone bust, but that's another story. So we'll see how this plays out. But yesterday it had an impact on the Dow. It was downhill from the start. The market down, it just kept bouncing back, came up to the 20-bar average, and then back down. And it was just like this, stepping all the way through, back up again, and then back down, until eventually the market double bottomed, which you can see here. Let me just make this a bit easier. You can see this here, we've got this double bottom in place before we get the usual retracement, and then off we go again. So markets are rallying back below the 20 bar, and then that same pattern before we go off again. So the market coming back to these 76% retracements that we've had drawn in for some time. There's two of them here. You can see how the market came back, and notice also the increase in volume. Market coming off the low. We've spoken about this type of price action for a long time, and oddly enough the market's starting to move higher, which is characteristic of this type of price action. So the market coming off the low and then starting to move back to the upside. So really what we could do here, I mean, the market is waiting for Powell's first FOMC announcement and live meeting, but I would be inclined to just throw in a 62 and 76% there. I'm going to get rid of the 62s because the 76 seem to be more reliable. I can't say accurate, but certainly more reliable when it comes to finding the sort of points where the market's likely to struggle. We're also notice below the 20-bar average as well at the moment. So sort of keep all of those things in mind. And also one thing that I have been playing with a lot, and again I'm going to do a lot more on this, is throwing in a trend channel as well. So using the line tool, if you right click and copy, and then we can throw this across there as well, and you can see, if I can just put it in the right place, that will do. So you can see there that this market oddly enough has to break through an area where there will be a sort of top channel as well as the 20-bar average. So it's going to take a lot to drive the market through there, but worth putting on the chart. And like I say, I'll start adding these in so you can actually see where they're drawn from and how useful they can be. Right, let's have a quick look at the implied volatility. This up yesterday, as you would expect, 1590 from 1369, which is perfectly acceptable given that the market was down for the day. Meanwhile, in Bitcoin land, this is sideways to higher. I'm surprised actually that we managed to pull this off so soon, but then we have got all of the news out of the way, all the social media sites that are going to ban the advertising of bitcoins or any cryptocurrencies. But what I'll be looking for here is when this market tops out here. In fact, let me get rid of this because we've already come back to that 76% retracement, and whatever else we've got here, let's get rid of as well. Let's see where this ties in. Oh, that's the bigger 76%. We'll leave that bigger picture one. That's coming off here, right over here. I think let's just have a look and see where we are. Yep, that's right. So we're coming off this low and all the way to the high. So just in case this market breaks to the downside once more, which is what I was just about to come to, that if we get a retracement, I'll draw this in. The market needs to move up slightly, and then we could see the market go back down and test these sorts of levels. And how do we test how much momentum's in the market? Well, we can use a retracement to the upside. We can roll the fibs to the upside as well. And what I would be inclined to do, if I can just find the tool. So what I can see so far, that we've got a sort of double top thing going on here with the previous bar's high. We've got this one here. I'm just going to do this as an experiment. You can see there that the market is sitting at 76%, just above it. So I'll cancel that one and I will move to the next bar high, which is this one. I need to load the tool back in first. So from there down to there. Again, I can see the market now is at 76% here. I'll just draw this in for you, got it there. So the market needs to drive through this area in order to move higher. And what I'll do, I'll just keep rolling this till I find a 76% where the bars turn red. That will give an indication where we could see then the next leg down. So this is a way to measure by using the previous highs and just keep rolling that fib back, because if the market hasn't made a double top type thing as we got there, you can see where the market's there, so we can know we're already above 76%. So we just keep moving back until we find a higher high to the left, and then just place on the rolling fib, as I call it. It works really well, as you've seen in the market alert. Right, that will do it for this one. It's Tuesday, FOMC tomorrow. I'd expect the market to be fairly quiet, to be honest, as they wait for Powell's first live FOMC meeting minutes tomorrow evening at 6 PM, because we're still different on the time zones at the moment, but we'll all be back to normal this next week following the UK's moving of the clocks forward this next weekend. Right, that will do it for this one. As ever, thanks for watching. See you in the next one.